What do you think? Today's moves? Any less likely to see potential Fed rate cut this year?
I mean, the Fed's going to cut this year. I mean, at least once, maybe twice. I think there's just a lot of this just has to do with the relative rate structure globally. And I think you've got a whole bunch of the world, the developed world, in negative rate territory. The Fed is an outlier. And I think given that and the backdrop for the election coming up, the Fed is going to do whatever it can to kind of keep things humming along. And that means probably probably two rate cuts by the end of the year.
Is the negative rate factor, $16 trillion worth of negative yielding debt out there, is that enough for the Fed to cut rates? Or are there things within the economy on a fundamental basis that also support your thesis there?
Well, I think so. The Fed has said that they're going to do whatever they can to extend the recovery to the periphery, and I think that's again a different mandate that the Fed has had, historically. But the chairman actually said it, and so I think when you look at this sort of pressure on them to effectively keep things going, the way that the rate structure is in the rest of the world, it lines up for at least one, and I think probably two by the end of the year. I mean, people are talking about there being 4 rate cuts between now and 12 months. I don't know if that's going to happen, but I think 1 or 2 is probably in the bag at this point.
Tentative trade deal by October, but then you say they can wait until the election. What are you expecting?
Yeah, so our base case is still waiting until the election, but a couple of things have changed. I think, first of all, we're beginning to see how much actually economic slowing there is in China. I think the Hong Kong thing is actually not so great either for President Xi, and he may actually need a win here. I mean, I don't know that, but I mean, if you're a China watcher, it isn't exactly great over there, and so I think the president probably needs a win too. The one thing that could really present a monumental challenge to the president's reelection is an economic slowdown. Now, I do think he's in a position where if it doesn't really work out, we do get a slowdown. He can blame the Fed, he can blame China. But I think all things being equal, it's better if we don't have an economic slowdown. If there's a deal that gets done, he gets to declare victory. She gets to declare victory, even if they're declaring different victories. Who cares, right? We got what we wanted, according to the administration, and everybody moves on. And so I think I'm a little bit more balanced now than I was. I mean, last time I was here, where I really thought, that China would just wait it out.
So you think it could be a deal in principle, something on paper? I mean, how tentative could it be?
So let's take a look at what happened with NAFTA and the replacement for NAFTA. Okay, is it really that different? It isn't really that different, but it's got a new name. President said, but we got, China, we got Mexico, and we got Canada to bend to our wishes. Okay, he just says it. And so I think that there's a perception out there that maybe that actually happened. We basically got NAFTA with a new name. I don't see why you can't take that rubric and apply it to China trade. I mean, I'll be clear, I don't think the Democrats have really argued that hard on China trade. It's really interesting.
If anything, they've outflanked him sometimes to the right.
Right. So in their mind, maybe one of the best things that happens is he goes forward with tariffs and there's an economic slowdown that creates a window. They're not arguing with China trade. And I think that's, with all the things that they are arguing about, that's not one of them. Right. And so there's a case to be made that the strategy of pursuing tariffs has been, all in all, a pretty broad-based success.
And
we'll see.
Hey, Jeff, let me turn you quickly to our own capital markets. You've got some experience in the IPO market. Of course, Cowen, a key underwriter, typically for smaller or mid-sized companies. But what do you make of the resistance amongst investors to the WeWork IPO?
Yeah, so I can't really discuss that one in particular, but I think you can actually talk about what's happening with some of the bigger tech names. I just think investors are being, public and company investors are saying, listen, we need to actually have a real conversation about valuation. And I think that's actually the health of the public markets, is to do that. So if there's a concern that I have, it's about all of the private capital that's crowded into technology trades without there being an ultimate validation of that value in the public markets, which I do think that the public markets actually give you the ultimate determiner of value. And so, whether it's that name or other names, I just think when they come to market, the public market investors now have a forum for giving very direct feedback on where we would want to own that. And so that's what you're probably seeing there, and probably some of the other
They want
ones.
a clearer path to profitability, and sooner, it would seem, than some of these companies are willing to give them.
Well, I think if you look at what's happened with Uber and Lyft and a bunch of these other folks that continue to spend money, I think they're there's some question on the part of public company investors. Listen, I also think public company investors are savvy. There are limited areas where there's growth. Generally speaking, what we've done and where we've seen growth, it's been with companies that have eliminated middlemen or have done some things to actually create efficiencies. And so, at the end of the day, public company investors understand that in the real world, you actually have to be able to show a clear path to a sustainable business model. I don't think that's an unrealistic ask on the part of public company investors.